Hey everyone, I've got 10 excellent growth stocks you can buy now at current valuations. I'm going to reveal what those growth stocks are. I'm also going to discuss how my top 10 growth stocks portfolio has performed so far year to date in 2024, so you get an idea if I'm somebody you want to listen to or not based on the performance of my picks previously. So let's take a look at the top 10 growth stocks to buy right now.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so let's go one at a time. Nvidia as one of my first top 10 growth stocks, trading at a forward price to earnings of 28.28. Nvidia is arguably the one stock that has benefited the most from the rise in effectiveness of AI. Nvidia is already seeing tangible benefits from this trend. Revenue is soaring, profits are soaring, cash flow is soaring. And so even though the stock price has increased meaningfully, it's still trading at a relative bargain because you're getting so much more. You're getting more profits, more cash flow when investing in Nvidia. The next stock, Fortinet, trading at a forward price to earnings of 32.8. The cybersecurity stock is my favorite cybersecurity stock in the industry compared to others like Palo Alto Networks, CrowdStrike, and others that I follow. I like Fortinet the best based on its growth versus valuation profile. Even though the cybersecurity industry is facing some stiffer competition, it hasn't yet impacted Fortinet, although I am looking out for the potential side effects of competition. If you've been a follower of my channel, you know competition is something that I look out for strongly because it has such a detrimental effect on profit margins. You can see evidence of that in the electric vehicle industry, how rising competition and the price wars has hurt profitability industry-wide. For every company in the EV industry, profits are collapsing because of the price competition. That's something I try to avoid, and I'm hypersensitive to competition. I'll be watching that for Fortinet going forward. The next one on the list, Amazon, trading at a forward PE of 33.81. The management team at Amazon has done an incredible job finding efficiencies in the operations, getting closer to customers, finding win-win solutions like reducing the distance for delivery. If Amazon can be closer to customers, it'll reduce the delivery distance, which lowers costs for Amazon. And at the same time, it improves delivery speed for customers. A win-win solution. Those are hard to find. Management at Amazon has done an incredible job finding these, boosting profits and cash flow, leading to excellent returns for shareholders. I expect those to continue in 2024. The next one on my list is Snap, the social media company, trading at a forward PE of 35.98. The company operates in a roughly $1 trillion advertising market with hundreds of millions of daily active users. I like this area. I like user-generated content business model. Snap should benefit from that trend. The next one, Fiverr International, trading at a relatively bargain valuation of forward PE of 8.8. The company is struggling because of several risks, notably two, how its impact from artificial intelligence. Will fewer people go to Fiverr to hire services because of AI? Management doesn't think so. Management thinks that as many jobs will be replaced from AI will be added because of AI as people help others use AI to improve their business. So there's that. And then Fiverr, of course, being an Israeli-based business, the war in the region has hurt the company and its valuation. So there's that to consider. PayPal trading at a forward PE of 12. PayPal just announced earnings that were better than expected and raised its yearly earnings per share forecast, something I was looking for the company to do, and it did indeed raise forecasts for profitability. I like the company's prospects going forward, over 400 million active accounts. I think that's going to be beneficial to the company longer term. Salesforce, the customer relationship management company, utilizing artificial intelligence to help its clients better use customer data and serve their customers better. Salesforce trading at a forward PE of 24.28. Uber Technologies trading at a forward PE of 21.58. Surprisingly, Uber's food delivery business has continued to thrive despite reopening restaurants and people being able to dine in. That's been a big surprise to me, and that's led to increasing cash flow and profitability at Uber. Alphabet trading at a forward PE of 19.56, the most dominant search engine in the world. The valuation has fallen because investors are concerned ChatGPT is going to take search engine business away from Alphabet. While that might be true, I feel that risk is overcompensated in its valuation. I really like Alphabet going forward at current valuations. And finally, Chewy, which I added just about 1 or 2 months ago to this list, is trading at a forward PE of 16.17. Management said that the pet market is declining in 2024 as people are adopting fewer pets, and unfortunately some people are returning the pets that they adopted during the pandemic, and so the industry is under a little bit of stress in 2024. However, I like the management team. They've done a great job finding efficiencies in their business as well, and more than 70% of their business is recurring revenue, meaning people subscribe to the things that they order for their pets on a monthly or bi-weekly basis. That helps the company with inventory management. If you know your sales are going to be a certain amount at a certain date, you can optimize inventory management, and that leads to better profitability for Chewy, and that's why I like Chewy going forward. Now, the performance of these companies has been relatively strong. You can see my best performer is Nvidia with 75% year to date. Chewy's down 35% year to date. But I haven't had Chewy on this list all year long. I only added Chewy on March 1st. So between March 1st and April 30th, Chewy is still down, but only down 14.92%. This is the amount I'll use in determining my portfolio performance as well. Finally, I'm going to compare my returns with the S&P 500 index and also the equal weight S&P 500 index, which returned 6.64% and 2.99% respectively. Now, looking at my returns, the top 10 portfolio for the year has returned 9.16%. A strong return to be sure. I would be happy with those returns in every 4-month period. That would annualize into roughly 27-28% for the year. I would be very happy with that kind of return for the year. What's more, it outperformed both the S&P 500 index at 6.64% and more than 3 times the return of the equal weight S&P 500 index. So this portfolio of top 10 growth stocks has performed really strongly against the broader market overall. And then 7 out of the 10 picks have been positive, with 3 of them being negative. And the big winner, Nvidia at 75%, trounces the big winner at negative 24%. So overall, I like these portfolio of stocks. I like their prospects going forward. And as always, I recommend viewers do further due diligence before deciding for themselves if any of these stocks are right for them. I have deeper analysis on each of these stocks on my channel, so feel free to watch those videos. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.